Hello and welcome to this special edition on the eve of Muhurat Trading for the year 2025, or as it's known in our traditional Hindu calendar, Samvat 2082. Or if I have to say it in Hindi, that would be Samvat 2082. I'm your host Sandeep Rao, and this is an episode about the various investing and trading setups that you can explore this Diwali. I know it's a busy time full of festivities, celebrations, travel, and family gatherings. But if you're anything like me, someone who lives and breathes the market, then no matter how packed your schedule is, you'll still find to participate in that hour-long Muhurat trading window. Today, I will share a few interesting Muhurat Day statistics that should help you irrespective of whether you are an investor or a trader. But then, I must also say it isn't just about numbers or trades. It's also about tradition and making a fresh start. So with that thought, let's get started. As I always do, first things first, what exactly is Muhurat trading? Well, Muhurat simply means an auspicious time. It's that one special hour on Diwali when markets are open for a symbolic trading session to mark the beginning of the new financial year, or Samvat as it's called in Hindi. Traditionally, people from the Gujarati, Marwari and the Jain communities do what is called Chopra Pujan, which is essentially worshipping the ledgers or books of accounts. Those days, a majority of the traders and investors on BSE were from these communities. This practice extended to stock markets as well. It became a ritual of sorts to symbolically trade or invest on this day. Muhurat was formally introduced on BSE in 1957. Back then, traders would gather on the floor, perform Lakshmi Puja and place their first trades of the year, not just for profit, but more as a ritual for good fortune. By 1992, trading had become electronic and NSE introduced a proper 1-hour Muhurat trading window. Today, if we look at it, it's evolved into a beautiful blend of culture and commerce. A moment where families, investors and traders come together to make that first hopeful trade with the blessings of Goddess Lakshmi. Now let me get into the specifics for this year's Muhurat trading window. This year's Muhurat session is scheduled for 1:45 pm to 2:45 pm on Tuesday, October 21st, with a 15 minutes pre-open session from 1:30 pm to 1:45 pm. Trading will be open across all three major exchanges, NSE, BSE and MCX, covering both the cash and the FNO segments. With the basics out of the way, let's move to the interesting parts. Here's a quick disclaimer. This is not a recommendation to invest, trade or consider any of the mentioned products for future investments. For the purpose of the backtest, I have taken close price as entry and exit unless mentioned otherwise. The returns shown are excluding all charges and brokerage. With the disclaimer out of the way, let me start with the hypothesis that I had in my mind. So here's the question. What if you had invested 1 lakh every year on Muhurat trading day for the past 10 years? Essentially, a once-a-year SIP made only on Diwali. To test this, I looked at 2 investing products and third, a combination of both. 1. NiftyBees ETF, 2. GoldBees ETF, and 3. A 50-50 portfolio split between NiftyBees and GoldBees. Let's start with the first one, investing 1 lakh in NiftyBees every Muhurat day for the past decade. Now here's how the table works. It lists the year of investment, date of investment which is a Muhurat day, the SIP amount and the total cumulative investment so far. Next, we have the portfolio value including all the returns. Then 2 key metrics, absolute return percentage and IRR, which is internal rate of return, which gives us a realistic picture of our average annualized return. Now focus on the 10-year IRR. It's around 14% for NiftyBees. That's roughly in line with what you would have earned if you had done a regular SIP at any other fixed date during the year. So while investing on Muhurat Day carries a strong symbolic and emotional value, statistically speaking, it performs just about the same as investing systematically on any other day. Now let's turn to gold, specifically the GoldBees ETF. Over the past decade, the 10-year IRR for gold stands at around 19%, noticeably higher than Nifty's 14%. Of course, part of that strength comes from a recency bias because gold has had an exceptional run in the last few years, and there's no guarantee that the next decade will look similar. To get an idea, look at the GoldBees SIP portfolio value as of 2024 Muhurat Day, which is at 18.96 lakhs, and NiftyBees, which is at 20.86 lakhs. That tells us that a large part of gold's outperformance has come only recently, that is this year. Next, let's see what happens when we combine the two, investing 50,000 each in NiftyBees and GoldBees every Diwali. And just to clarify, this is a non-rebalanced portfolio. We simply invest and let it compound. The result? The combination looks nice. While I haven't calculated the volatility, it's intuitive that a blend of equity and gold would be far more stable than investing solely in NiftyBees. Once again, as I mentioned earlier, there is no statistical timing advantage to investing on Diwali day versus any other day. But symbolically, it's a wonderful tradition, one that combines faith with financial discipline. Makes complete sense to me, and I would do it for sure. I have also plotted the returns for all the three versions of the Muhurat SIP portfolios for you to have a look. You can clearly see that the NiftyBees was leading until last year, while Nifty plus gold was almost similar. And the recent outperformance in gold has made the GoldBees only and the NiftyBees plus GoldBees portfolios take the lead. So for those planning to invest in index or gold this Diwali, do it for the sentiment and symbolism, and the best part is by investing on Diwali, you are not compromising on returns for sure. So that was for the investors among us. Now let's shift gears and look at something for the short-term traders, those exploring a Diwali swing trade on Nifty. The setup is simple. You enter on Muhurat Day close and exit anytime between day +1 and day +5. What you see on the screen is based on NiftyBees data. Notice the pattern. There's a general positive drift in the index. That's because historically Nifty tends to trend upward over time. So almost any random 5-day period will show you a mild upside bias. Still, look at the win rates. They hover around 50% to 70%. To me, that doesn't exactly inspire confidence for a high probability short-term trade. Now let's apply the same logic to GoldBees. While the returns are relatively muted, the win rates are actually higher, especially as we move to day 4 and day 5. It's again not particularly exciting, but it's interesting for sure. Gold does show a steadier short-term return profile around Diwali compared to equities. So far, we've covered ideas for the investors and swing traders among us. Now let's turn to something more exciting. This one is for the traders, the misfits, and the mavericks in the room. Let me start with a BTST trade setup. And yes, disclaimer time again. This is not a trading recommendation. I'm simply sharing historical trade statistics. Please do your own due diligence and backtest before acting on any of this. So here's the hypothesis. Buy one day before Muhurat at the previous day's close and sell at Muhurat Day open. Classic BTST, just timed around Diwali. Now here's what the table shows. You'll see the year, the Muhurat -1 date, the closing price on that date, the Muhurat date, and its opening price. When we do open minus previous day close, we get the gap. And that gap is expressed as a percentage of open. And that's what we are seeing. Another fair warning though. This is a small sample, just 10 data points. So treat it as an interesting anomaly, not a rule. The data here is based on Nifty Spot. So keep in mind all the usual open-close challenges as I explained in the overnight versus intraday episode. Exact prices aren't always perfectly tradable. That said, do you see what I see on the table? We are looking at a 100% win rate with a median return of around 0.66%. That's quite impressive for a one-day overnight setup, I would say. There are several ways to take this trade through futures, options, or even MTF, that is margin trading facility if you prefer. I've covered the futures and options approach in detail in the overnight versus intraday video. Check it out if you haven't. As for the MTF users, I've linked the MTF calculator in the description. Please go through it carefully and account for all the costs before using it. Let's now turn to GoldBees. Would a BTST work here too? Before we dive in, a quick note on why I chose GoldBees. That's because its closing time aligns with Nifty's regular market hours, making the comparison clean and consistent. Now here's what's interesting. GoldBees also shows a 100% win rate with a median return of around 1.13. The gaps are noticeably larger than Nifty's, definitely something worth exploring further. If you are planning a BTST trade, diversifying across both Nifty and gold could be a sensible play. You can take this either through gold futures on MCX or via MTF on GoldBees. Just remember, returns will vary depending on your approach. Futures and options behave differently from the cash market, so factor that into your risk and cost calculations before taking any trade. For the overnight traders, we explored a BTST setup. But I know what some of you are thinking. Sandeep uncle, tell me what actually happens intraday during that 1 hour Muhurat trading window. Is there anything worth trading there? Now hold on to your horses, I'm getting there. Let's start with Nifty Spot. I pulled the data from the past 10 Muhurat sessions looking at the OHLC prices for that 1 hour window. Now take a look at the range column. It shows how much the index moved as a percentage of open. That's particularly useful for those of you who trade short wall setups like straddles or strangles. Then comes the ROC, rate of change. Now this tells us a very different story. Surprisingly, 9 out of 10 years the index actually closed in negative. Counterintuitive, right? If everyone's buying stocks on Diwali, shouldn't the index go up? Well, markets have their own logic, and this is one of those fascinating anomalies. And finally, the last column shows the gaps, which ties back to what we discussed earlier in the BTST segment. A similar story plays out in gold, only this time it's far more volatile intraday. And just like Nifty, gold too has a tendency to close negative more often than not during the Muhurat session. Now obviously this data by itself isn't a trading signal, but it should help you build your own intraday setup for Muhurat trading. And yes, in line with Zerodha's tradition over the last 15 years, brokerage charges over all trades during Muhurat trading session will be reversed. Zero brokerage on all intraday FNO and commodity trades. But a friendly reminder, just because there is no brokerage doesn't mean you go overboard with trading on Diwali. The liquidity is quite low compared to other days because major institutions don't trade on Muhurat day. It's primarily the retail traders who do. If a trade goes wrong, you don't want to spoil your festive mood. So keep your position size small and your mindset light, and most importantly, have fun. Because after all, it's Diwali, not an expiry day. I hope you like the investing and trading ideas that I shared. As always, please remember to do your own research and backtesting before deploying your capital. With that, we come to the end of this special edition on Muhurat Trading 2025. I had fun walking you all through the data, the stories, and the traditions that make this Muhurat trading session so unique. I wish you and your family a safe, prosperous, and a joy-filled Diwali and a very successful Samvat 2082. May your portfolio shine as bright as the diyas this festive season. Happy trading and happy Diwali.